I'm going to do my best Tom Crown voice. Welcome to episode 12 of the We Are CC podcast. I am Mr. Poppy, and I'm going to be doing the intro because Tom Crown is still recovering from Bitcoin 2022. I know next week he's going to share some of his stories and misadventures. If you guys didn't watch the news, it looked like a lot of fun. Of course, they tanked the market again, just like last year. My intro was supposed to be the man who thinks Satoshi is actually from the future and created Bitcoin as a drunken bet. Then we have the young gentleman who I was too busy to create an intro for, Mr. Oz. And the man who owns a Lambo because Ferrari is owned by Fiat, Mr. Mister. Yes, you guys are allowed to laugh at that one. I thought long and hard about that.
That's a good one, Pap.
All right. So first thing up, obviously, I believe at least half of us, or 2/3 of us, were just coming from trading Bitcoin today. And boy, was that an adventure or maybe a misadventure this week. I assume, but perhaps not everyone here, was paying attention to the news and knows that this week, today at 12:30 p.m. UTC, the U.S. government released its basically its inflation report, like the state of inflation. And depending on the outcome of that, we knew that the markets were going to be volatile. They started to price in an anticipated, larger than expected increase in inflation last week, which is why we saw the markets start to dip down. And I think a lot of people were hoping for a little bit of a rally or recovery today, at least a little relief. But it seems like the whales do not want to give it up. And I think last I checked, we're back down to where we started here, below 40K. So Oz, you're our low time frame guy. What are your thoughts for surviving a market like this? Because it's tough. This is what a lot of traders call the PVP. So like bull market's PVE, meaning it's easy. You just kind of enter trades, things go up, you make money. Now there's a lot less liquidity. The big players, the whales, they're having a lot of fun counter trading each other and retail. Any thoughts on how to get through the rest of this week? Because I know we also have some earnings reports and some other things coming.
Yeah, for sure. So, I mean, especially when there's big announcements coming from the government, you need to keep watch on those because it takes effect on any time frame. And while it may necessarily not affect the announcement, the build up to it and the speculation is usually what's going to hurt you the worst. I'd say definitely don't try to trade the chop. If you're worried about how volatile it is right now, just zoom out. It may look volatile on like maybe the 2-hour or the 8-hour time frame, but the second you drop to the daily time frame, it looks pretty okay to trade. It's a consistent trend for a few days at least, so just don't get caught up in the chop and try to keep your eyes on the larger time frames.
Yeah, I think that's good advice. And then, remembering the stop loss. We always harp on that. We always bring that up, but especially times like this where there's a lot of uncertainty in the markets. The CPI was the big news for this week, but a lot of the big banks also have their earnings reports tomorrow and then I think like 3 on Thursday. And depending on the outcome of those reports, there's definitely going to be some comments from them in terms of what inflation is doing to the general markets. That could shake things up a little bit too. The first thing I think we want to talk about beyond Bitcoin, I know we usually lead off with Bitcoin, is, and I thought this was interesting. This is one of the things that came out of the Bitcoin 2022. Cathie Wood, who owns the ARK investment, a lot of people probably remember her from last year from being one of the other major Bitcoin bulls next to Michael Saylor at MicroStrategy. So Cathie Wood is ditching PayPal, which this is kind of significant, right? PayPal until recently was really the king of internet, money transfers, money payments. I think over probably like 15 years ago they came out, maybe more. And for a long time, they were really the only option that you had. But she's ditching their investment in PayPal and going completely to Block, which is the Jack Dorsey company, the guy from Twitter. So, this is something you and I were talking about not very long ago, which is the next iteration of crypto and the next iteration of DeFi is kind of bridging that day-to-day real world utility. That's where I think crypto is kind of lacking, right? You can transfer money pretty cheap and you can do it quickly, but it's pretty intimidating at times. Trying to set up the wallet, remember, make sure you're using the right wallet address, that kind of stuff. What are your thoughts on Kathy ditching PayPal?
I think it's a sign of the times, right? It's really looking for those plays that are, and Kathy's got, I mean, that's her investment pretty much thesis as well, right? It's going after innovation, it's going after disruption, and looking for that next opportunity for maybe that asymmetric upside, right? So I think it all makes sense. Why would they stay with kind of that quote unquote industry incumbent with what is, let me just say, arguably inferior technology, right? And they definitely, PayPal has definitely done a great job of trying to integrate into, this new world, into the crypto space. But they've fallen short on a couple things, right? And I think in terms of opening up that access, like you're talking about there, Pap, for just the regular Joe off the street. That is where that next wave of liquidity is going to come from for, Bitcoin, for the crypto space at large. But maybe we just talk about it in terms of, the majors, Bitcoin, Ethereum, what have you. I think it makes a lot of sense because when you look at the adoption rates on PayPal and their installed user base, those numbers standing alone, they they are, well, maybe not the adoption rates on the crypto products as much, but their installed user base is massive, especially compared to Cash App. And that, I think, is a great justification for moving into Cash App because of the growth potential there, right? And now Cash App is positioned to build that growth on the back of crypto native technologies. And I think that's huge, right? It's fully bought into, Jack Dorsey's Web3 mantra, right? His views of trying to decentralize, and he's even owned up to his maybe missteps in turning Twitter into the centralized behemoth it is. So I think it's great. I think, whether or not, whatever your thoughts are on Miss Wood there, I think it's a good play by Ark, 100%.
Yeah, I know it was really exciting. I think it was like last year, maybe the year before, when PayPal came out saying that they would support certain cryptocurrencies. I think they started with like Bitcoin, Litecoin, Bitcoin Cash,
Something like that.
which is pretty common. Yeah, it's usually those. I call them like the boomer coins, but that's what a lot of companies go with initially, just because, especially Bitcoin and PayPal, just has that kind of trust within I guess, the TradFi side of the house. But something like Block is going to take it, to the next step and really do more of a native crypto type platform or service. So I think that's pretty cool. I haven't really heard a lot from Jack since he's left Twitter. I know he's busy. I don't know if you guys see. Is he just been like head down working? I saw something once in the news that said that his work routine was like 16 hours a day or something. Like, the guy was crazy.
I mean, I've seen a little bit. I've seen him at conferences. I can't remember specifically which one, and whether it was before he left Twitter or just around the same time. But his head is very much in crypto at the moment, I think, because everything related to him, other than obviously leaving Twitter at the moment, has been crypto related, which is good to see. But also touching back on the PayPal thing, I think it's really cool what they're doing, but it's similar to how Robinhood approached it. You still don't own your keys, which is a major downside. And I think with Cathie Wood and Jack Dorsey coming in and trying to take a new approach to it, while also still appealing to the general public, I think it can only really be positive. Maybe rather than not giving people their keys because they simply can't be trusted, rather educate them on, why they can't be trusted with it, and then give it to them rather than just keeping their keys.
Yeah, well, what a lot of those platforms do is, if they control the keys, that means that they can also use, the underlying currency, the tokens, to maybe reinvest or do other things. It's just kind of shifty all around. You really want to own your own tokens and the keys to them and coins, which actually is a good segue to Oz. So the next thing we're going to talk about the next thing is stablecoin investing. So for a lot of people in the space, especially in market conditions like this, they're heavy into DeFi, and for good reason. It's a lot more generous than your traditional banking and financial institutions in terms of what they'll pay you to basically just store your funds with them. But there's also some centralized entities, not just in DeFi, but some centralized entities like Celsius or BlockFi that also do this. Now, because of the US's, I'll say, kind of oppressive stance towards crypto, just cryptocurrency in general, the US continues to crack down on passive investing of stablecoins. To put it simply, it's a little more complicated than that, but today Celsius, which is one of the larger providers of said service, they said that they will stop supporting new deposits from their American investors, which is just cutting off yet another good option for American investors. And slowly but surely is forcing you either into DeFi or into other even riskier, options, maybe less established, centralized options. There's always an exception to this, right? It's the U.S. It's the king of capitalism. What's the exception to being able to store your, investor stables for like 4 to say 8% APR? Do you guys know?
I mean, you can sell your blood, but other than that, I think, this just, it gets me so mad to see how this is working out, right? Because it's one thing to say that it's not a regulated, or it falls outside of regulatory frameworks, or it fits in a certain framework, so nobody is allowed to use it. But this saying that you have to be an accredited investor in order to access it, right? Or maybe we should back it up, right? They're not turning off, Celsius isn't turning off their yield products, their staking products. They're only going to be offering it going forward to US accredited investors. That's just fancy finance talk for saying folks with provable, verified big bags. And that's what makes me mad. It's one thing to freeze everybody out and say, this is not a safe product, nobody should be using it, but it's a completely different thing to just freeze out a specific portion of the population, which is actually the majority of the population, right? And so it's bullshit. I'll just say it, it's bullshit. Sorry, Pat. There's a swear word.
No, that's quite okay. So they actually firewall off. Maybe some people don't know this if you just trade a little bit of spot, once in a while. But there's a lot of financial instruments, a lot of financial investments and platforms and things in the U.S. that you and me and just the average Joe investor cannot touch, cannot access because we're not one of two things, which is you've passed some sort of certification course, which is usually very hard to get as a retail trader, or you have, a provable amount of capital collateral already. I remember when Kraken, they tried to please the American regulators, and I think it was something like, I don't know if you guys remember, it was like you need to have provable $10 million in assets or something like that. And I thought, yeah, and I was just thinking, man, if I had $10 million, I could think of better things to do than try and day trade on this, bite my tongue, on Kraken. It's really starting to become a major challenge for U.S. investors because there's actually not a lot of things that we are allowed to do. So you really have two options, right? One, like I said, look at DeFi. Two, you can look at some of the competitors. Or three, and I'm not recommending this, but the third one, which some people choose to do, is to use a VPN. But keep in mind, if you guys go through the VPN route, one, they may still find out, right? But two, some of these services will shut down your account, sometimes extremely quickly, if they detect you're from an area that they legally determined they shouldn't be supporting. And you know what? I don't know if you guys saw, I love how much insider trading happens in crypto. The token for Celsius, someone apparently had been selling off before the announcement went out about this.
Oh yeah, I saw that. It already dropped like I think 50 cents by the time it actually got announced, which is quite a big dip for a little altcoin.
Yeah, it's like a monster red candle. So good job to whoever in the Celsius corporate headquarters, pulled that off. Well played. By the way, love to have you on the podcast. Hit me up. Yeah, and that's not the first time we're going to talk about insider trading today. So did you guys hear about Shiba?
Shiba Inu, yeah.
Everyone's second favorite dog coin.
Let's get some alpha.
Yeah. So what happened with SHIB? I heard there's some spiciness.
It got listed on Robinhood along with, I think, Matic, Solana. There was another one, but I forgot its name.
Compound.
Yeah.
Yes, it's one of those OGs in the DeFi space, which I thought was an interesting choice, actually. I would say it's probably like the least sexy of all the OG DeFi, but that's just me.
Never heard of it.
Yeah, you can Google it. It's kind of like your very traditional DeFi 1.0 type product. Would you guys say that Robinhood is probably Wall Street Bet's favorite trading platform? Because of
100%.
I'm just thinking when I heard that they added SHIB, I was like, man, I bet Wall Street Bets is all hype today.
I wonder who they're trying to appeal to. They saw the money dropping off after the whole GME and AMC calm down. Need to get the apes back in there with Shiba Inu.
Yeah, we're running out of meme stock. Let's swing back to the meme coins. Yeah, I was kind of surprised. I didn't hear about that, but I think it was right around the time it happened. Right around the announcement was right around the time that the CPI inflation report came out, and I thought, boy, SHIB investors are really, really happy about this inflation report. I probably should have Googled it a little bit, but I mean, in any case, I am glad that they're adding more coins. Even if Robinhood isn't my preferred app, it is one of the more accessible apps for investing. So it's good just to have more options for the people that are new to the space. Axie Infinity, last week, the week before, that massive hack, which I still can't get over every time I think about just how much that person pulled off. Over $500 million.
It's insane.
I mean, it's just mind blowing how much money that is. $622 million.
You even spent on. It's a bit too much.
Yeah. Yeah. Can he sweep some of the floors on my NFTs? That would be great. So did you guys, I posted that little picture and I don't know if you guys can see it, but he actually spent, or she or they spent the day, a few days after they spent their time doing trades through like Tornado Cash of 100 ETH at a time. And it looks like they just spent like 2 days doing this, like just endlessly, like here's another transaction. Here's another transaction. 100 ETH at a time. I mean, could you just imagine that feeling of sitting there being like, yeah, 100 ETH, boom.
Another 4 million.
Endless Lambos.
Sounds like a dream.
Click Lambo, click mansion, click boat. But maybe we shouldn't be glorifying this guy because he is.
It's a bad guy.
He is a black hat. He's a bad guy, right? But on the flip side of it, I think that just goes to show why security and thinking about security and planning for worst case scenarios down the road, it's just like privacy, right? You have to do it before anything goes bad, because putting up a bounty program after you get hacked kind of almost doesn't matter. Like the trust has already been worried.
It's the whole point,
right? And exactly, there's no point almost now. So I think that speaks to kind of a due diligence thing too, right? Because as you go, Pap, and as you go, Oz, into different projects and especially into DeFi, one of the first things that you look for is what? You look for security validation, right? Among the first things you look for, you're looking for that.
Yeah, it's important.
Or you should be looking for that. But somehow it just kind of got lost in the shuffle with Axie. It just kind of blows my mind, actually.
I think it's probably because it's so big. People see the price tag associated with it and the market cap. They just kind of presume someone else has done it. And when it becomes this big, it's just a long chain of people passing down the blame and the due diligence. So, I mean, this is like such a major exploit, and it took them to get it exploited to find out. But I read somewhere that like it was actually known about for quite some time, or at least the exploit was like possible for quite a while. So it's probably just associated with like the price tag and the market cap and laziness.
And what's incredible though is they're only still down like 30 something % since the hack. Could you imagine any other business, any other corporation, anyone else losing $622 million in crypto? 30% is nothing, right? For an altcoin, especially in these conditions.
Yeah, I think the resiliency is really just, it speaks to the strength of their users, right? And the fortitude that they have to believe in really what they invested in, and belief even more in the team, in the company, in Sky Mavis, really, to make things right. Whether or not that's the case, hats off to all Axie holders. It's good to see you guys are staying strong.
Yeah, I am not without sympathy, believe me. Most of my port wiped last year thanks to DeFi hacks. I know exactly how you guys feel. Sometimes you also got to laugh about this space because if you didn't, you go crazy. I still haven't checked out Axie, actually. I think I have to get in there sometime. Yeah, we're here to talk about Coinbase, everyone's favorite exchange. I'm still waiting for their promised NFT launch, their marketplace. I'm on the waiting list. I think it's like 2 million strong now. I think it's going to be wild when they launch. Even if it's bear market, I'm convinced that's going to produce an NFT bull market when it goes. Are you guys on that?
Yeah, that seems huge. I don't know. I don't think I can sign up to it. I'll check.
Definitely get on that list. I mean, even if you're not doing NFTs, you just never know. Maybe there'll be some airdrops. Maybe there'll be some else. No promises, but it costs nothing to get on the list. Takes 2 seconds.
Free money.
What were you saying, Mister? I know you're not a big NFT guy.
Yeah, I mean, just casually over here, but I'm really excited for the GameStop side. I think having more players in the NFT market space is good to really be able to take on OpenSea, right? But what worries me about, and I'm always this guy on this podcast, but it's just what's going to happen with Coinbase, I think, knowing that there is no way to really stop insider trading. We've seen the problems that OpenSea has faced. I wonder what's going to happen when we scale that, to Coinbase.
That's a good point. Yeah. So OpenSea, for those who don't know, has had a bit of a scandal over the past year with some. I think it was proven, but I'm going to say it's not proven. I'm not sure because I don't want to get in trouble. But I think it was very likely that there was some insider trading on some NFT projects at OpenSea, and people were in an uproar. And there's been a few attempts to kind of replace them to build a competitor. I think the most hyped one was LooksRare, which is a decentralized alternative to OpenSea. Now there was some drama surrounding LooksRare's launch as well, with some pre-sales to influencers and trying to go that route. It is a decentralized alternative. That's one you can look at. Of course, you have Rarible. Rarible is working on fully decentralizing as well. But at the end of the day, no matter what, OpenSea has the lion's share of liquidity in the market, and with NFTs, it's much, much more important to have that liquidity, have that interest and those buyers lined up. In other markets in crypto, that's usually not an issue. Usually, if you're in a mainstream project, you're going to swap your tokens no matter what. You're going to have liquidity pool. You're going to have buyers lined up somewhere. But for NFTs, it's not always the case, and that's why I think OpenSea has maintained that monopoly, because people freely admit it. I see it on Twitter all the time. Hey, look, I'd love to use something else, but maybe they have like some blue chip, like a Bored Ape or Zuki or something, and like you could go to alternatives. You might recently you might make off a little bit better on LooksRare because they have some sort of kickback in tokens you get. I haven't really kept up on that, but your odds of finding a buyer are always better on OpenSea, which is frustrating because I agree with you, Mister. I want to see a lot more competition out there. And yeah, I didn't think about the GameStop one. Do you know when they're launching? Did they say?
Oh, they've been teasing it pretty hard, so it's imminent. I think, was it CZ or Binance just in general had teased something? I'm not sure. But yeah, it's imminent at this point.
I remember they built it on it was like some platform, some tech I don't really hear much about, some project in crypto. But do you think they'll have their own like GameStop token?
Ooh, that's the $1 million question, man.
Oh man.
Don't know. Don't even want to speculate on that one. But I'm definitely going to be interacting with the platform as soon as it's available, just to try to position myself for a possible airdrop if that comes to fruition. Just hedge bets.
If you want to know when it comes out, just look for the next major sporting event, because you pretty much always line it up for that.
Oh, genius, Oz. That's genius.
Too smart. We go and like put a bet on this or something.
Do you guys have GameStop over in the UK, Oz?
We have something called Game. I don't know if we have GameStop. I don't know whether they're the same company. I presume not.
Just Game?
Yeah, just Game. It's like nationwide.
I thought you guys invented the English language. They couldn't finish it. It's just Game?
Yep, just Game. Or Game Digital, but they like to get to the point.
Okay.
There's no need for this stop.
Very efficient. Yeah, I would definitely keep an eye on that. I'm personally pretty hyped for the Coinbase one. Even though I'm not a fan of Coinbase as a company, I have to admit one thing, which is I think that their UI, the UI design that they do is so clean and so much better than a lot of the competitors. I think a lot of these other exchanges, especially the ones that were born out of Asia, they all seem to use the same copy and paste, like UI UX style. And it's, to me, it always feels very, very busy and very gamified, which is okay. I always thought Coinbase, for all its flaws, has a really nice, clean interface. So I think the NFT, if they launch a really nice, clean, easy to use app, it's going to do good.
Are we going to give them a pass on the employee front running on those newly listed tokens?
Yes. Yeah. Speaking of, so you guys probably saw in the news, or maybe not. Coinbase decided to expand their listing, the number of offerings. It sounds like they're aggressively expanding at this point, and just about everything is getting thrown up there for consideration to list on Coinbase. But it turns out that someone kind of front run, yeah, whatever. They loaded up hundreds of thousands of dollars of some of these new coins that Coinbase was considering listing before the announcement was made. Only one place knew what was coming. If it was one project, you might be able to blame that individual project, but no, it was someone from inside Coinbase had to have known. And it was Kobe, for those on Twitter. He's a pretty well-known Twitter personality for crypto. He was the one that found it. He has a really nice write-up about it. You can check out. It's pretty fun to read in the comments.
Clown base.
Yeah, his clown base comment. Yeah, but you do see that a lot in this space, and I think it's just due to the lack of regulations that it's hard to enforce, especially on the decentralized side. It's one thing for Coinbase because Coinbase is a corporate entity, so there could be some sort of reasonable recourse there if someone wanted to pursue it. But it's a lot harder if it's, say, some little DeFi project that is not on any sort of regulator's radar. So always keep that in mind.
Yeah, but even for Coinbase, you're speaking to the whole decentralization aspect of it. How do you stop, even as a big corporate with resources and the ability to, reasonably track your employees? Because make no mistake, you are being tracked by your employer. How do you stop someone from creating an anonymous, non-custodial wallet, a decentralized wallet, and doing this? The challenge is in proving that they did it, really, right? So it's hard to stop, and it's hard to enforce, I think.
It's true. Well, because, on the stock side, they have to report, like a lot of these government organizations, right, or employees, they have to report their investments, or in the companies like this, maybe. I don't know how they enforce insider trading for stocks.
They don't.
Well, because you can see all the movement, and right, they're on registered accounts, so you know who's doing what, which isn't really possible with anonymous wallets. So I think we were speaking many episodes ago now about the MetaMask tie-in with institutions, right? Financial institutions. So I think this is going to set the stage for really some interesting regulations coming down on anonymous wallets in the near future. So keep an eye out for that.
Yeah, it's a good point. It would be this kind of stuff that really leads to that kind of regulation. And they're already talking about it, right, in the EU, talking about KYC for non-custodial wallets, which would, besides the fact that it's just ridiculous, will be such a headache to implement. And I think the onus is often like, say I was going to send you some money, Mister, I was going to send it to you over over Ethereum. I was going to send you $100. I think the way they were doing is basically saying like I'd have to put, submit your name, like your information or something, maybe your address into the exchange in order to send that to you.
That's creepy.
Well, yeah, one, it's creepy. Two, I mean, at that point, I might as well just use the bank, right?
Yeah, there's not much incentive there.
Oh yeah, so pop quiz for you guys. So besides the insider trading, some of these wild coins that Coinbase came up with, I just couldn't believe some of the stuff I saw. So one of them was, I was gonna quiz you guys and see. I didn't put it on there. See if you actually knew what this was. Here we go. Student coin. What do you guys think it is?
Teaching.
Teaching what?
University, something like, I don't know. Teaching crypto?
OnlyFans for college students.
It's like no.
So it's not then, is what you're saying?
Yeah. So basically, the way they put it is that you can create your own custom tokens on it to use for crowdfunding, trading, governing, to enable scalability of startups in the early stages. Why it's called student coin, I don't know. I seem to remember there was like some shit coin, meme coin, apologies for the language, from like earlier cycles. Maybe it's even the same one for like 2018 or something. Do you guys remember that?
No.
This is like old news.
Is it paper?
Oh, wow, yeah, that thing did get a little bit of price rise. Yeah, no, this one's from 2020, so this isn't the one I was thinking of. The good news is it started off, it was 0.002 cents in 2020. Now it's 0.004. If you hodled through all of that, you've doubled your money today.
Not bad. Not bad.
So I feel like there's two things we keep coming back to. Love it and hate it. It's a little bit of both, probably. One's Bitcoin. The other is the Bored Apes. It's like they find a way to be in the news every week. So Coinbase is going to be making a short film series about the apes. Have you guys heard this?
Like on Netflix?
Mm-hmm.
A film? Wow.
Maybe Coinbase has its own streaming platform. It's called the Degen Trilogy. I'm not kidding. That's really what it's called.
Why would they do this?
I know you're bullish on Coinbase, Pep. Coinbase's moves recently, it just reeks of desperation, right? They're just so afraid of losing their market position. FTX is really nipping at their heels. When you start seeing things like this, as a former corporate, I can just imagine all the strategy meetings and all the brainstorm sessions on how do we fight back? Oh, shit coins. Oh, we should do a documentary that really worked well for XYZ, And so they're just trying whatever they can to at least try now to build a moat around their user base, or at least around their brand. For me, I just see that as maybe not so healthy internal corporate goings on right now. They're reaching a little bit. I think it'd be one thing if, you had the crypto community or a project, that was independently able to create a documentary and actually add value. But when you see a corporate put out content like this, you really have to question their motives. And I think, especially with their forthcoming, NFT offering, I think it's a little too obvious. So yeah, sorry, Clownbase. Come at us though if you guys want to be on the podcast. Let's talk.
I'm not Mr. Poppy loves Coinbase. Come on the podcast. Thank you. We do actually have so on the AMA side, we have a few exchanges floating around the RCC community potentially. Yeah, potentially. Well, I think we did have one the other week. I'll talk to Mr. X. We actually have a lot of AMAs queued up. So we actually would really, truly love to talk to a lot of folks in the space. So feel free to hit me up, hit Mr. X up or one of the moderators in RCC, because there's a form you can fill out if your project, your chain, your exchange, or whatever, if you're in the crypto space and you're interested in doing an AMA, we won't take everyone and anyone, but we will at least consider it. I was looking at Coinbase's chart while you were talking, Mister. Oof. Yeah, I think they really need to hit a home run. That NFT marketplace for them is going to be critical, especially if we're entering a potential recession, or something close to it, and we see a bit of a drawdown in crypto activity. Not saying we will, but I'm sure that at their corporate level, this is something that they're looking at. They're at an all-time low right now. Their stocks 150 right now. It's the lowest it's ever been. It's down 54% from last year, which I think it launched. Yeah, it launched last year. Remember, we thought, and maybe there was some truth to this, we thought that they were kind of manipulating the markets. Again, this is just game theory. This isn't provable. But this is right around the time that we were hitting those initial all-time highs in Q2 2021. And it just happened to coincide with Coinbase's public offering, right?
A nice coincidence.
Saying the timing worked out. Yeah, but they did actually return, and they hit, I believe, their all-time, no, it wasn't their all-time high, but they almost reached it again last October, November. But since then, it's been a steady decline. So tough times for those guys. But on the other hand, looking at, I would call their main competitor, everyone's competitor in that space, Binance. And I don't remember if I put this down below. I think I did. So I skipped to that in the agenda a little bit. But Binance is pivoting to the Middle East. And I think a lot of this, not just me thinking this, a lot of people are saying this is because of all the regulatory issues they've been having virtually everywhere else in the world. Lots of countries, especially in Europe and the US, regulators have been extremely displeased with Binance. They've done themselves no favors over the past couple years with doing stuff like, I believe, I can't prove this, but I believe like providing information on how to use VPNs to connect to their exchange. Obviously, countries aren't going to like that.
It's not the smartest move. I remember the outrage in Europe when they got banned. Well, not banned, but they got very stern warnings from literally every country, and there's a massive drama about it. It's like the Binance FUD phase of the market.
Yeah.
So it's good to see they finally found their footing.
Yeah, I remember when they stood up Binance US because you couldn't use the normal Binance anymore. My friend had a bunch of Ethereum on there. He just sold it at the time. I wish he had held on to it. But yeah, in the United Kingdom, the Financial Conduct Authority, everything sounds so fancy in the UK, said last year that Binance was not capable of being regulated after it failed to provide basic information to the regulator. Boy.
It's that corrupt, allegedly.
Yeah, I don't know. CZ didn't get to be the richest man in the world for nothing, or one of them, right?
Yeah, he's high up there. He made the Forbes list, I think, for like the youngest billionaires.
Yeah, he did.
He's crazy wealthy.
Well, Kim Kardashian made it by reality TV show and some cosmetics.
Yeah.
Ice Cube's launching a new NFT project, and it's linked to his basketball league. So for those who don't know, he has a basketball league he's been trying to promote for quite a few seasons now. And it's 3-on-3 format versus like the NBA is like a 5-on-5. And the way he was framing this, now I think there's a lack of detail on this article and in the interview. The interview was kind of fun to watch, though. He did kind of elaborate a little bit on why he likes not just NFTs, but crypto and the disruption to like the mainstream and how it enables the average person, basically, right? A lot of the things that we also appreciate about it. But he was talking about, in his words, if the people want it, you can make it happen. It's the ultimate FU to the mainstream programmers of the world, and it gives power to the people. And, having a chance to own a portion of a basketball team is kind of cool. It's a lot different than having to be a billionaire and buying a basketball team. I don't think that's going to happen for any of us anytime soon. So, that might be fun to look into. I'm not saying that you guys should ape into it, but I thought that was a clever idea to start kind of decentralizing ownership in sports teams. Now, I don't follow football as much, European or non-American football, but maybe you've seen something about it, Oz. Didn't some of the like one of the teams in the UK do some big NFT project?
I don't think so. I know they all have like fan tokens on Binance, and in Barcelona, the Spanish club, they released like an official token, which is quite cool, but unfortunately, it doesn't give you ownership of the club. But I think that's quite a cool concept because we already see it with fan tokens, and it's just another way for fans to like, feel like they're a part of the team or, feel like they're a part of a community. So it's quite a cool concept.
Fractional ownership of anything is a cool concept, in my opinion.
Yeah.
All I think is like how unfortunate that the XFL didn't happen in this kind of sorry, Oz, I'm sure you're not aware of the XFL, but that was kind of like a competing separate American football league that wasn't able to survive. And I wonder, would it have done better if it had launched as a with NFTs backing it and Ice-T back? I mean, that might have changed the game for him. It's just unfortunate, but it does. It just brings back memories for me of the XFL. I hope it succeeds.
The XFL is it's back. I don't know if you knew that.
Wait, it's back? Oh, where have I been?
Yeah, right before or right during COVID or somewhere around there, the XFL stood back up. I think Vince. So Vince McMahon, he sold it. He sold it to The Rock. So I don't know if you missed that headline. It's wild times over there in WWE. Vince McMahon land. I guess he was too busy managing all the wrestlers to keep up with XFL.
Dwayne The Rock Johnson, he owns it.
Mm-hmm. Unless you know another The Rock.
No, that's the only major one.
Happy The Rock.
the United Kingdom version of The Rock.
Walks around everywhere with a British accent. That'd actually be quite a good twist off movie.
A Samoan with an English accent. Yeah, anyways, off topic, but let's see. I agree. Yeah, fractional ownership is something that crypto actually can make easier. It's not new, and it's not even new to crypto, right? This is something that's existed in a lot of other areas. If you think about timeshares, like owning, sharing a room or a house or something at a resort, with 100 other people, each of you get 1 week of the year, or famous artwork, they have fractionalized ownership of that, or hey, that's basically what stocks are, right? You're owning a fraction of the business. So what I think crypto does that the others can't do is make it very easy to build something into that fractional ownership. Now there's always the legal hurdle that comes with that, but just in general, these are the kind of things. The same reason, when you guys look at like NFTs and you see there is so much junk out there. I mean, you scroll through an NFT website. I mean, there's so much junk, but that's because it's so much easier to just hop on and mint something than say try to get published on some online art gallery. It makes things more accessible. That's what crypto's all about.
That's a beautiful statement.
Thank you. I rehearsed that one.
Pretty sure we say something like that like every week now. Mm-hmm. It's a running thing.
It really is, yeah. All the beautiful things of crypto. I should make a book about that. What makes crypto beautiful? So on the Reddit side, we had a few things that we saw a few headlines that caught our eyes over the past week. We'll start with, I think this one's from maybe like a week or two ago, but Snooper Mike was talking about Luna, and he was talking about shorting Luna. And I wish I wrote down the date at which he said he was shorting Luna. So, we could pull up the chart while I'm looking at this. But according to him, the logic there was that, Anchor Protocol's vote to slowly decrease the basically the rewards on UST is passed, and he was expecting a decrease of like 1.5%, basically a decrease over time. And so he thought one of two things would happen, right? He said that they'll top up reserves using pre-mined Luna tokens and inject into the supply, or they won't top it up. The API will be unsustainable, even with the vote to decrease yield, which means people will abandon it and go somewhere else. And so because of this, he thought it was a good time to short Luna. So I'm actually kind of curious now. If we look at Luna over the past, and actually I was surprised, I thought the narrative around Luna and Do Kwon buying all that Bitcoin was kind of a very exciting and bullish narrative. And I still think it is. But that doesn't always mean that has to reflect in the token. And So if you look at Luna over the past what seven past week is just nothing but down. Okay,
It's not pretty.
you have to go back to okay, not bad. It was on the rise until about April 6th. So it's probably just trending with the market, to be honest. But it's not countering the market. It's definitely trading with Bitcoin. So, sir, you probably made a good move there. I would expect it was probably about a week ago that you entered that short. I hope you kept it open.
I kind of agree with him. It's a smart play. I mean, I never really got behind the whole buying Bitcoin narrative anyway. I don't think that's bullish for Luna. I just think it's, or USD. I just think it's bullish for the whole market. But then this is just adding another aspect to it. It makes sense, People that are like trying to yield farm, they're just gonna go where, the highest returns are. So if they start decreasing it, then I mean the incentives quickly run out.
Hmm. Yeah, that's one of the great challenges of DeFi. So especially I know you know this very well, Mister. You always have two challenges as a DeFi protocol. One, you need those high enough rewards to incentivize people to stay in your ecosystem some way somehow. And on the other hand, you have to manage those emissions because eventually you're going to run out of tokens eventually you're going to inflate the supply and the value is going to drop. And in any case, you're never going to please everyone. Either you want to be a sustainable protocol long term, or you want to, just dump a billion trillion tokens out there and eventually just devalue them to nothing, right? So you're right. You're right, Oz. I mean, in short, yeah, that's something a lot of call them DeFi apes. They like to just jump from one protocol or one project to another. They look for the highest rate. They jump into it. It might only be for a few hours, few days, and they jump into another. What are your thoughts, Mister? You're the DeFi wizard here.
Yeah, I don't know about Wizard, but thanks for the nickname. I think it is a fundamental issue, right, within DeFi. And I think the sustainability narrative is something that really needs to be explored, because until that mindset changes, right, where you have this mercenary capital that's always chasing high yield, you're always going to have projects that don't care about long term. They're just in it for the quick buck, right? And they're just in it to get the initial price action, get that initial flood of users, and just hope for the best and maybe figure out the sustainability issue as you go along and as you get enough, treasury capital built up into your treasury, maybe you'll be able to figure it out, right? I think that is it's it's a complicated problem because you're talking about human behavior and human incentives, and unless critical mass of people look towards sustainability as their metrics for how they judge a DeFi project, I don't think that trend is going to go away. But that's not to say that it's not already a narrative that is developing within the DeFi space, right? Sustainability is really top of mind for quality projects. And one of the signs, I think, of one of the hallmarks of a project that is looking at that long term is tokenomics is an approach that allows for, say, dynamic control perhaps of your emissions, right? That allows for you to adjust your emissions rate to really stay market competitive, but not overly so, because anything above, a few points above your nearest competitor is just a waste of tokens. And that's really a minority viewpoint right now in the space. But I do believe that is changing. You have the big players starting to look at different solutions for dynamic control, composability of your tokens, right, of your strategies. I think there is going to be a trickle down from the blue chips that are starting to see the light in this way and have been moving towards sustainability. It's just a matter of time before that trickles down through the entire ecosystem. But for Luna specifically, I think we're just seeing it again for a lot of the Luna bulls out there, of which I have tons of friends that are. It's been nothing but up for those guys. And really, Luna's been really impressive in how they shook off that liquidity crisis that they had not too long ago. So, from where they sit, I would imagine it all looks rosy, but really the fundamental issue of sustainability was always looming, right? And now it's kind of what's that saying? The chickens have come home to roost, or is it the cows that have come home? Somebody's come home, and somebody's got to pay the piper, right? And so to mix up a bunch of the wrong sayings, I'm not too surprised, to be honest.
Yeah, yeah. DeFi can be a tricky space, and it's even trickier for the people that manage and run those protocols because it's really experimental. At the end of the day, they're trying to rebuild the types of services that the banks and other governments have had generations to really refine into. Of course, their model they've refined into takes away most profit, takes most of the profit and revenue and pours that back into their own pockets. But DeFi is trying to do that in a much shorter time frame, a few years, and they're trying to do it in a way that's more fair to us. I mean, it's pretty wild when you think about it.
I mean, that's why I'm in the space, right? And I think, with the whole disruption narrative, the accessibility narrative, the what is right and just, I think those really ring true for me. And I would imagine a lot of the players in DeFi, but it really still comes down to that perhaps being almost taking second seat to the profit, right, that folks can make. And that's really it's really tough to change the way people think about it. Like, how much is enough? And is it enough to earn just competitive, or do you need those crazy high yields? Do you really need that excess? And really, I'm not sure how or when that shift in mindset is going to happen. But if we look at traditional finance, I think the early days, the heydays of Wall Street being that Wild West, that has shifted and people have gotten used to and accepting 0.01% interest on your savings account. So in that same way, I think it's only a matter of time before folks start to view it as a more, quote unquote, traditional source of earnings, or at least asset accretion. I believe at least it is going to happen faster than we've seen with the traditional finance system, because the pace of innovation, the pace of the technology moving forward is so much faster than anywhere else, even in Silicon Valley, right? It's been kind of Silicon Valley, and the tech scene has been that poster child for build fast, break things, iterate, right? Move at breakneck speed. The speed that DeFi moves at would put the big boys in Silicon Valley and even the startups to shame. It's an order or two magnitudes faster, and really, I think, more interesting, because these truly are new innovations. We're not optimizing existing models, right? Traditional startups, for the most part, are out there to really, even if they do claim to disrupt an incumbent player, they are just optimizing existing models to do that disruption, to become more efficient. This is a completely different kind of disruption, in my view, right? This is looking at it from, let's not optimize the things that are not working. Let's turn it on its head and look at different ways while still taking the good things from the system you're trying to disrupt. You copy from the best and you make up the rest, basically. That should be a t-shirt. I stole that, by the way, but
That's beautiful.
Yeah, so we're gonna move into the Q&A, but before that, one comment. So I posted this on Twitter today. This is very timely. I was looking at that Celsius news, and I was thinking, man, okay, so obviously the U.S. government doesn't want me to use these services. So let me look at my bank. Let me see what I can get. I thought a comparable product to like yield farming and DeFi would be a certificate of deposit. Would you guys agree that's probably as comparable as you're gonna get, right? You lock up funds for X amount of time, you get X amount back. And usually it's a little more generous than what you would get just keeping it in a savings account. And certainly better than what you get in a checking account, which is usually nothing. So the bank I use, which by the way is a top 10 bank in the US, I'm not going to say which, is a top 10 bank. If I was to lock up $10,000 today and kept it there for 1 year, my bank would give me $2. I'm not joking. That's actually what the website says.
what?
That's
On
what
a
it says.
CD?
That's what it says. I could send you the link. It's on Twitter. Yeah. Well, they say point
And they
point
advertise
zero
that
two
as a good
percent
thing?
is what it says.
yo, who's using these products? Like,
So then I looked at Forbes to see what the best 3 month period across the US, the best 3 month CD rates were. And so the top one, I'm not saying go look these guys up and use them or anything, but there's some place called Total Direct Bank, which already sounds kind of scammy to me. But hey, they offer 0.5% APY. That's the best in the country for a 3 month CD. But you need a minimum of $25,000 if you want to use it. So what's it?
Pay to win.
0.5%. Come on. And you need to have that much. I'm just going to say the average American probably doesn't have that much free cash. A lot of people, real talk is a lot of people out there that just don't have the money to invest, period, into anything. They're getting by paycheck to paycheck. If they can put a few $100s, maybe $1,000 into their bank account, over a couple month period, they'd be pretty happy. And that's when I look at stuff like DeFi, and you can get 5, 10, 20% on stable coins, and I think, man, that's probably close to what the banks are making with your dollars, and then they're keeping most of that, and then they give you that paltry less than 1%, that fraction of a percent back for to thank you for making them richer. It's just disgusting at the end of the day. There's no other word for it. I mean, do you guys have a better word for it? I think it's disgusting.
No, man, get
Pretty
mad.
fair.
We should be mad about that, right? And I think that
Yeah.
is part of why we do what we do. That grossly lopsided incentive structure. For me, it's hopefully going to open people's eyes to, like you said, all that profit, right? Especially in recent loose economic policy times, coming almost fresh off of the economic crisis, the banks were turning right around and maybe using some bailout funds, and they were printing record profit after record profit. Like, how is that possible? You guys almost died, and you can do that, and everybody's okay with just continuing on as normal, that is a little bothersome.
We should be angry. And if you're too young to remember, just get angry because we say so. As the old men on the call, but like
Those were told.
it was yeah. It was the reality. Like you would see the headlines back then, the last recession, 2008, you'd see these headlines like the banks need bailed out because they literally are about to topple the global economy. Like no crap. Like this is about to happen. Have to be bailed out. There's no choice. And then months later, headline bank CEOs, getting their like $1 million or $2 million, whatever bonus for the year. Good job. Pat in the back. Like what? Really? And the system is just, it's so messed up. And that's why I personally care so much about crypto. I mean, obviously I'm in it to make money like everyone else, but more importantly, it's the only way I see as someone that's lived through so many recessions, so many once in a lifetime economic crisis that at this point I just give up on the the government system. It's already set to fail me. It's failed me most of my life. I don't think anything's going to change.
Right. And I think that it's really, again, only a matter of time before, because we are the people we're talking to, by the way. I literally do not have a Lambo, as Pappy said, right? That's not the case. We are the people that we're talking to, and we've been failed, and we've been really marginalized, I think.
The move is just turn it into a DAO.
To turn the US into a DAO. Hey, let's go.
DAO government.
Mm-hmm. Yeah. Podcast out. Let's do it. 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 Podcast out.